Welcome back to the channel. Today, we're diving into one of the most important and often overlooked financial topics of 2025, how to invest during uncertain markets. Because let's face it, the economy is shaky, headlines are chaotic, and no one wants to lose their hard-earned money. So what do you do when things feel unstable? Grab a coffee because we're going deep. Before we kick things off, I would really appreciate if you considered subscribing to this channel. It would help us grow and get financial wisdom out there. Part 1: Why markets are uncertain in 2025. Let's start with what's going on right now. As of 2025, markets are swinging harder than usual. Why? A few big reasons: ongoing trade tensions and tariffs between major economies, inflation rates that remain stubbornly high in key sectors, interest rate uncertainty from central banks, geopolitical instability. And let's not forget, tech-driven disruptions changing entire industries overnight. This kind of environment creates volatility. And volatility leads to fear. But here's the thing, fear-based investing is usually the most expensive mistake you can make. Part 2: What not to do in uncertain markets. Before we get to the strategy, let's quickly cover what you should not do. Don't panic sell. When markets dip, many investors cash out, locking in losses. This turns a temporary drop into a permanent setback. Don't try to time the market. Even professionals rarely get it right. Waiting for the perfect time often means missing gains. Don't ignore your investments. Inaction can be just as damaging. You should be informed and adaptable, not absent. Part 3: Mindset shift. Investing is a long game. Now take a deep breath. Great investing is rarely about chasing hype. It's about long-term thinking, especially in chaotic times. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." That mindset has built fortunes. Part 4: Strategy 1: Dollar cost averaging DCA. Let's get into strategies. First up, dollar cost averaging. This means investing a fixed amount of money on a regular schedule, no matter what the market is doing. Why it works: you buy more when prices are low, you buy less when prices are high, you remove emotion from investing. It's simple, it's effective, and it's perfect for volatile markets. Part 5: Strategy 2: Diversify with purpose. Next, diversification. Not just don't put all your eggs in one basket, but thoughtful diversification. In 2025, consider spreading across stocks across sectors, tech, healthcare, utilities, bonds short and long-term, adds cash reserves, and maybe even a small allocation in alternative assets like gold or crypto. Remember, different assets react differently to the same events. That's how you protect yourself. Part 6: Strategy 3: Emergency fund. First, before you even think about investing more, do you have an emergency fund? Markets are uncertain, layoffs happen. Without a financial cushion, you might be forced to sell assets at the worst possible time. Rule of thumb: save 3 to 6 months of essential expenses. Keep it in a high-yield savings account. This fund buys you time and flexibility when life throws curveballs. Part 7: Strategy 4: Invest in what you understand. Now more than ever, it's important to invest in what you actually understand. In uncertain times, complexity can lead to poor decisions. Ask yourself, what does this company or ETF do? How do they make money? What's their long-term potential? Don't blindly follow TikTok advice or trending stocks. Build conviction, not confusion. Part 8: Strategy 5: Use tax-advantaged accounts. Make your money work harder by keeping more of it. Use accounts like IRAs or Roth IRAs for 101ks, tax-free investment accounts. Depending on your country, these accounts shield your investments from taxes, which can be a huge advantage during volatile years. Part 9: Strategy 6: Stay the course. Stay informed. Now here's the truth. Market uncertainty isn't a glitch. It's a feature. It always exists in some form. What matters is having a strategy, understanding your risk tolerance, reviewing your portfolio regularly, and staying calm when others panic. Part 10: Bonus tip: Automation is your best friend. Want to win in 2025? Automate your investing. Set up automatic contributions, let your brokerage invest on your schedule. It removes guesswork, builds discipline, and keeps you in the game. You can also use robo-advisors or AI-powered portfolio builders, many of which have low fees and high convenience. Let's wrap up with some final thoughts. You don't need to be a genius to invest in uncertain times. You just need a plan, patience, and the ability to ignore noise. So whether you're just starting or already invested, this is your reminder. Don't wait for perfect conditions. Invest smart today. If you found this video helpful, hit like and subscribe for more actionable finance content. Drop a comment. What's your biggest investing fear right now?